Hello everyone, myself J. Kiruba from Department of Commerce, Assistant Professor in KSR College of Arts and Science for Women, Tiruchengodu. Today let us discuss about Unit 1 in Indirect Taxation. What is indirect tax? Indirect tax is a tax wrapped inside the prices of things you buy. Indirect tax. The government takes money to the shopkeepers when you shop, like GST and value added tax. Futures of indirect tax: shifted, burden, embedded, price consumption based, no direct link, equal rate, unavoidable, inflation link, universal research. Merits and demerits of indirect taxation. Merits: revenue generation, universal coverage, social engineering, simple, administrative, low events, choice of flexibility, investment incentives, convenience factors. Demerits: regressive nature, inflationary impact, high collections of cost, consumption discouragement, trade discounter, economic inequality, revenue uncertainty, hidden burdens. Unit 2, an overview of goods and service tax. What is GST? GST is nothing but goods and service tax, a unified tax through replacement of almost all the indirect tax in India. It was introduced in July 1st, 2017 with the slogan of One Nation, One Tax. Concept: eliminations of casting effect, unified national market, simplified compliance, reduced tax events, boosted makes in India, increased government revenues, logistic efficiency, consumer cost reductions. Futures: One Nation, One Tax, best revenue, dual control system, 4 major slabs, fully digital portal, value added additional focus through some exemption limited, continuous chain credit. Benefits: lower product price, easy business setups, no tax cash taking, higher revenue growth, automated tax filing, faster cargo movement, lackage proof system, global market edge. Rate of GST in India: 0% for fresh vegetables, milks, eggs, flours, and other stationery like napkins. 5% on packed food items, tea, coffee, medicines, and LPG cylinders. 12% on butter, cheese, cell phones, computers, business, etc. 18% on hair oil, toothpaste, electronics items, restaurant, and banking services. 28% on luxurious car, air containers, and cement. 28% plus compensation cases like tobacco, sports utilities, special rates 0.2% to 3% gold jewelry. Unit 3. What is CGST and IGST Act in 2017? CGST Act in 2017 means the central law for tax slides inside the same state, money goes through the central government. IGST acts in 2017, the federal law of tax sales between two different states, money shared between central and the buying states. Classification: there are interstate supplies, sales within the single state like CGST and SGST. Intrastate GSTs, sales between different states changed as IGST. United territory supplies, sales with union territories split into CGST, UT, GST. Imported supplies, goods and services bought into India treated as IGST. Exported goods services seen in India terminated as zero rated. Inputted tax credit. What is inputted tax credit? It means reduce the tax you pay on sales by the amount of tax already you paid on purchases. It ensures you only pay the tax on the value added and prevent paying tax on tax. E-way billing. What is e-way billing? And e-way billing means electronic way billing is monetary digital document required for the moving goods worth more than 50,000 rupees within or between the states in India. It acts as the official proof of movement and must be generated online before the transit begins. Export of goods and services. Export means selling the goods or services from India to another country. Tax rated is 0%. The benefit is the businessmen get refunded from the tax paid on raw material. Conditions for the services. Payment must be received in the foreign currencies. Imports of goods and service. What is meant by import? Import means buying the items or service into India from another country. Tax rated, treated as intra-state sales and charged with IGST. Payment. Imports pay the tax directly to the government via reserve charge mechanism. Thank you.